Are buyer's agents really worth their fee in 2024? That's what I'm going to talk about in this video. Today, I want to talk about who a buyer's agent is, the different types of buyer's agents who are out there, what a buyer's agent does, and finally, I want to reveal whether it's worthwhile paying a buyer's agent a fee for their service. So stick till the end because you will really know what a buyer's agent does and whether or not you should use one. Now, before I get into the video, let me introduce myself. My name is Jadu Srikandan. I'm a buyer's agent for property investors and I buy properties in undervalued regions around the country where there is good growth and good cash flow potential as well. So if you want to work with me, book a session at my website, propertyframework.buyersagency.com.au. Now, back to the video. Who is a buyer's agent? Now let's get down to the basics. Now let's look at who a real estate agent is. A real estate agent is someone who is working for the seller. The seller will pay the real estate agent for selling their property. On the other hand, a buyer's agent is someone representing the buyer. So the buyer's agent will work with the buyer, understand their goals, requirements, and find a property for the buyer. So the buyer's agent is getting paid directly from the buyer. So that is the essential difference between a real estate agent and a buyer's agent. So there are different types of buyer's agents out there. There is the one that works in a certain geographical region. So typically they work with own occupiers, first home buyers in that region, and in some cases they also work with investors looking to buy into that market. There is also the other type of buyer's agent, which is the data-driven buyer's agent. So they buy in different markets around the country where the data is looking good. Now you also should be aware of another group who are not actually buyer's agents. Now they work with developers and can sell you off-the-plan apartments, house and land packages, and they get a big chunk of money from the developers, and that money is essentially added on to the price of the product that you are paying. So you should always be aware of that. Now, let's get down to what I'm doing. So I am a buyer's agent who follows the data-driven approach. So I buy in different markets around the country where the data is looking strong. So what is my process? That's what I wanted to talk about in this video. I want to deep dive into exactly what I do so that you really know what a client will go through when they work with me. And by the end of the video, you'll have a clear understanding of the service that is being provided and whether or not the fee is worthwhile or not. So the very first step when I work with a client is understanding their goals and requirements. Do they just want to buy one property, or do they want to buy a few properties down the line and build out that portfolio? If they're just going to buy one property, then there's no requirement for me to find a short-term growth market. We could just buy into a market that has solid long-term fundamentals. But if they are more ambitious and they have a plan to buy a few properties, then there must be a plan to build out that portfolio. We should know how many properties we need to buy, how many years it's going to take for us to achieve a particular passive income target, when we need to sell off the properties so that we can use the cash from that sale to pay off the remaining debt on the other properties, and when exactly a particular passive income target can be reached. Now, if you were someone who wanted to achieve a passive income target within a short time frame, then typically the process to buy properties has to be very aggressive, and you'll find that you'll need to buy properties within that 3 to 5 year window. But if you were someone who weren't so aggressive and you didn't mind taking a bit longer to reach a particular target, then we could spread out those purchases. So that's the type of conversations that I'm having with clients and planning out their portfolio. Now, if you were someone who already had existing properties, then I would add those existing properties into my spreadsheet and then plan out how the future has to look like for you to achieve your goals. So we clearly have a roadmap at stage number 1. Now we move on to stage number 2, where we identify the correct market that is primed for growth. Now, if you were to building out a property portfolio, then essentially you need to have short-term growth. You need to find markets which will give you that short-term growth. And that's what I do, where I look at different markets from around the country using three main factors. So one is past growth. I don't want too much of growth in the past. Number two is affordability. I don't want the affordability in that market to be stretched. And number three is understanding current market trends. I want to see certain market trends like days on market reducing, vacancy rates reducing, inventory levels reducing, and that type of thing. This gives me confidence that the market is heading in a direction that's going to give me good short-term growth over the next 1 to 2 years. So we really look at different markets around the country. Now I've analyzed in a different video 50 different SUAs in Australia. So if you haven't had a look at that video, have a look at that here. You'll get an understanding of the type of analysis that's being performed. So it's not only the regional markets that I analyze, I also analyze the LGAs within capital city markets. I also did recently one video on an LGA in Brisbane, Perth and Melbourne. So if you haven't checked out that video, check it out here, and then you would know the type of analysis that's being performed to shortlist markets. Now that's the stage number two. The next one, now we know a market that's primed for growth, but how do we really validate that market? How do we know that this market will have sustained growth? How do we know that this market has the economic vibrancy, has the diversification in terms of its industries for me to really have confidence in that market? So that's why we go into the next step and further deep dive into that market. So I want to share with you a typical report that's shared with clients whenever I shortlist a market. Now let's have a look at that report. Now let's look at the region of Rockhampton as an example. Now in this report, we are really going to validate Rockhampton as a market for sustained growth by looking at different things like economic conditions, the infrastructure projects, the livability, and the population growth. So by looking at these factors, we would really know that this market has the fundamentals in place for sustained growth. Now for any market that I propose to you, you will get a similar report. So essentially, we're going to start off by really understanding where Rockhampton is, and this is just talking about the highlights in that region in terms of the property market and the major infrastructure projects. We'll look at the GRP of economy and want to see that the GRP is steadily increasing. We want to see what is really driving the economy, the different industries that are driving the economy. We don't want to see the economy just being reliant on one or two industries like agriculture or tourism, for example. We want to see that there is a wide range of industries that is supporting that economy. So that's what this chart is about. Here we see that there are several industries that are powering the Rockhampton economy. Then we want to look at unemployment trends and want to see that the unemployment trends is generally going down and it's in line with the national averages. We want to look at the population growth to get an idea of how population is moving in that region. We want to monitor the interstate migration trends and make sure that that region is getting net internal migration and not losing migration to other areas. For example, in this case, Rockhampton migration increased by a significant amount during that 22-23 period, and that's a very positive trend for the property market. We want to see that the dwelling approvals are trending low. We don't want to oversupply of approvals coming in and creating a surplus properties on the market. We want to really look at the lifestyle in the region. Does it have hospitals? Does it have good transport infrastructure? Does it have tertiary education facilities? Does it have major shopping centers? And does it have recreational activities? So these are some of the things that we'll look into to make sure that people actually like to work and live in this region. We'll look at the property market over a period of 30 years to see when the market has actually gone through a growth cycle, when it has stagnated, to really understand where that market is positioned in its growth cycle. And then finally, we'll go into the current market conditions around the sales and the rental market. The final thing is the infrastructure projects. So we want to see
what kind of infrastructure projects are coming into the region. So we want to see the type of project, the value, whether it's completed or ongoing, and the impact it has, like how many jobs it's creating. So for example, in this region, we're seeing a lot of projects in the resources and energy sector in Rockhampton. We're seeing projects in the transport sector in Rockhampton, and we're also seeing other commercial developments in Rockhampton. So clearly some billion-dollar projects in the pipeline for Rockhampton. So this is essentially a summary which really validates the property market and lets us know that it has some really good fundamentals.
Now that we've had a look at that report, we know that this market is primed for growth. We know that it has the fundamentals for sustained growth. It's now time to start sourcing properties in that market. Now, when I work, I typically work with a lot of real estate agents around the country, and they're constantly giving me off-market deals. Now, why are off-market deals important? It's because we are in a really low stock environment at this stage, and when you're buying into these markets that are moving up in value quickly, you'll find that there's hardly any property available on realestate.com and domain.com. So you will find that you're constantly missing out on properties, and the properties are moving up in value. So when you work with someone like myself, I can get an off-market property and make sure that you close the deal without having to waste your time. We will get the deal done faster through these off-market deals. Now, when I present a property to you, it goes through a complete due diligence check. I wanted to share with you a report to show you the depth of due diligence that's being performed. So let's have a look at the report that I present to clients whenever I present them with a property.
This is the due diligence report that is provided for each property that I present. For example, this is for a property in Rasmussen in Townsville. Let's have a look at it. So the first thing is we really want to look at the street and have a satellite view of the property. We want to make sure that it's in a standard residential area away from any noise. We want to make sure that we have a good rectangular block. And then we want to really zoom out and see that we're away from any things that could cause noise. For example, we don't want to be in front of a factory. We don't want to be in front of a school. We don't want to be in front of a shopping center. We want to make sure that our property is in a standard residential area together with all the other houses. Then we get in some facts of the property, like when it was built, the block size, the building material, the zoning, what potential it has from a development perspective, when it was last sold for, and how much rent it can get. We really want to see the owner-occupier percentage in that pocket. We're not talking on a suburb level, we're talking on a street level. In that street or a collection of streets, what's the owner-occupier percentage? And we want that number to be really healthy. We want to look at the socio-economic profile of the pocket that we are buying in. So this is, again, it's on a street level. We really want to see what type of people live there, their incomes and so on, and that we can clearly know from the CFA score. Then we want to see the public housing, how much of housing commissioning is available in this pocket that we are buying in. And of course, we want to look at easements. Does the property have any sewer easements or stormwater easements? In this case, there is none running through the property. The red ones are the sewer easements, so there's none running through this property. The most important thing, we want to make sure that the property is not affected by floods. So in this case, this property is out of a flood zone, and we also want to make sure that it's outside a bushfire zone. So again, here it's clearly outside the bushfire zone. It's inside a low risk area. So these are the basic things that I would run through when I present the property to a client. On top of this, you will get a video walkthrough of the property, giving you a complete understanding of the type of property that you are buying. You will also get feedback from the rental manager around how much rents this property can get, and if any work needs to be done before you can rent that property out.
Now we've seen the level of due diligence that's being performed. The next step is essentially for me to coordinate with all the other parties, like the mortgage broker, conveyancer, building and pest inspector, to make sure that the process go smoothly until settlement. Now, it's not like I'm going to pressurize you to immediately put an offer on the property that I'm asking you to. You get the opportunity to say no if you really found valid reasons to not like the property, and I would continue the process until you are happy with one property. So that's essentially, in a nutshell, the service of what I do, and the fee that I charge for this service is a flat fee of $10,000 plus GST. Now, similar data-driven buyers agents are charging anywhere between 12 to 15K for the service that they provide. You're getting something really good at a really affordable price point. Okay, so I've spoken to you about my entire service, what a buyer's agent does. This service would be beneficial really to someone who is time poor, who doesn't have time to research markets, who doesn't enjoy the process of researching markets, who is busy during the daytime at work and during the weekend busy with kids. This is the type of person who would really benefit from this service. But if you were someone who enjoyed researching markets, enjoyed speaking to agents on a daily basis, and enjoyed getting deals done, then maybe this service isn't for you. Now, typically the return on investment that you would have, and I can't give any guarantees, but clients in the past have had at least 10% growth in their properties within that first year alone. So I'm saying at least 50,000 growth within 1 year. Now, we've given you a clear idea of the service and what benefits you can get. Do you really think the service of a buyer's agent is worth it, or is it not worth it for you? I hope you found some value in this video. I'll see you in the next video. Thank you.